Single family home prices fall to more than a decade low for the first time in over 10 years. Ladies and gentlemen, why are the size of homes going down right now in spite of everything that's happening for the need of homes in construction, pricing, interest rates, and everything that's happening economically? One of the big indications that modifies what's happening in the housing industry is interest rates. And knowing that interest rates have went up so substantially over the last year and a half is a great indication as to why housing size has actually went down. Now, one of the main things that I talk about and I tell people in our business model of buying land and building houses, I tell them, look, you can build a house as small as fits your market. So if that's a 1,300 square foot house, you build a 1,300 square foot house. But I always tell people, never build in excess of 2,700 square feet. And the reason why is because anything over 2,700 square feet becomes a luxury item, especially in a compressed market. And here's how that is affected. So right now, the average square footage of homes has been reduced to 2,191 square feet. So it is down by over 8% of its square footage price of where it was at just during the pandemic. And one of the main reasons is because when people were home during the pandemic, they had a greater need for larger space. They needed more office space. There was more people at home. They wanted to have more living space. And ironically enough, interest rates went down to historical lows. So when interest rates are low, the cost to the buyer is a lot lower, so their money is a lot more expandable. When they have a lot more buying power, they're going to buy more square footage. They're going to go in and invest in larger homes. So home size actually increased during the 2019 pandemic. It continued during 2020 and 21, and then hence, as we moved into 2022, interest rates started to rise. All of a sudden, housing sizes started to plateau. And so hence, now in 2023, interest rates are through the roof. Cost of money is extremely expensive, and so the buying power for the end user has now went down. So when buying power has went down, people are back at work, the need for larger home space has actually decreased. So right now, people can go into a more modestly sized home, save money from not buying massive big homes, and that's where the market has trended to. Hence, when you're building homes under 2,700 square feet, it's going to fit the masses. And when it fits the masses, you're going to sell your homes. If you get too big and you get too absorbent on size, you have a hard time moving the end product. So according to the National Associations of home builders right now are really seeking out that mid-2,000 range floor plans that are sitting between 2,000 square feet and 2,500 square feet, because that is their key component in main purchasing, and that is their main purchasing area for home building. So make sure that you guys, as you guys are investing, as you guys are going out there until interest rates plateau and buying power becomes more aggressive, make sure that as an investor, you're strategically positioning yourself to sell to the masses and sell to those people to meet their needs, not their luxury items. And so right now, we need to make sure that we're paying attention to what's needed, not what's wanted. And in times where money's tight, that's what you service. You service what is needed, not what's wanted. And right now, the market sector for investors, fix and flippers, new build, and for those of you guys buying single family homes is coming in between 2,000 square feet and 2,500 square feet. That is what's called the sweet spot. Okay, now, some market update information as to unemployment and how it affects the housing market. Right now, one thing that I always tell people is you can tell when we're entering a residential housing market recession based on unemployment. When unemployment rates go up to historical highs in excess of 7%, 8%, and we start pushing those historical high numbers, one thing that happens is that residential home buying power goes way down, and now it becomes a buyer's market. Now, one of the things that we've had a labor pool that's been less than favorable to the employers and more favorable to the employees over the last few years. Unemployment ranging under 3% for a long period of time over the pandemic has now increased to 3.8% in August. Why is this important to know? Because as unemployment climbs, that's where housing prices typically start to plateau or the market starts to change. because there's such a massive need for single-family residential dwelling units right now, we're not seeing a decrease in price. In fact, over the last 5 months, we have continued to see a market increase in residential single-family home prices, which 7 months prior, we saw home prices for 7 consecutive months go down. Now, come July 2023, we've seen 5 months of consecutive increases in single-family home prices. Now, in May, we saw a 10.6% annual increase year over year. We have slowed down a little bit on our price increases, but we're still at 8.6% year over year price increases in the July market. Now, in a healthy market nationwide, ladies and gentlemen, anything that is in excess of 1.5% is great, healthy, stable growth. So when we're still seeing price increases of over 8% annually year over year, we're still sitting in a very favorable spot, knowing that housing and single-family residential rooftops are needed for the masses. And because of supply and demand, and our supply still hasn't reached the demand, I believe that we're going to continue, in spite of high interest rates, see more homes come to the market because there's a need for them. We're just going to find ourselves, according to the National Association of Home Builders, building smaller homes that are more modest, more reasonable, and more palatable financially to the end buyer. So it's not whether we need homes or whether you should be buying homes. It's the type of homes you should be buying and building and investing in versus whether you should or should not be buying or investing. With an 8% annual increase in returns, ladies and gentlemen, that is a solid return on investment for any investment, whether it's stocks, single-family residence, or any market sector whatsoever. So understand, we are sitting right now at a place where it's still a seller's market. It's just, what are you selling and how are you buying? And right now, the place to buy is between 2,000 and 2,500 square feet. And that is the market sector that you will continue parlaying massive success as we move through this crazy market in 2023 and into 2024. Look, if you want market updates just like this, content that's relevant to the current market and your real estate investing future, then click and subscribe to our YouTube channel and pound that thumbs up button, and always go out and compound your success.